Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, September 12th, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. In this view, you'll notice that price has just retested two very important levels. Number one, it's the August high. That's the blue line right there, the August high. We just taken it out here pre-market. And then the cyan line, this one right here, that is from July 31st. That's the FOMC key level at 3016. We've just hit that as well. That's very important because that was a naked FOMC key level. Since the day of its creation, price sold off tremendously. It bounced. Eventually this became the low and price returned back to retest that level. That's something we talked about during the August monthly outlook, as we talked about the importance of the FOMC key level and how price tends to play out. So for the most part, we're seeing a return to that level, and now we have to see how is the market going to respond from here. Is it going to continue to push higher? Because this was a 1 month trading range. 1 month trading range there where this thing went mostly sideways and built up a ton of energy. So this breakout right here is only the beginning of what could be a broader breakout, or it could be the beginning of much more volatility to come. For example, if this thing breaks to the upside here very strongly as it did, any pullback right now shy of dipping back below 29.50 here could still be a buying opportunity for another continuation higher through those recent highs. Conversely, if this is a rejection back at these highs, then easily we could come back to retest the breakout point, 29.40, and if we fail to hold the breakout point, then market structure theory suggests we rotate back down toward 28.20, that recent support. So this is a very important zone here to watch. Right now, at least on the pre-market intraday basis, price has pushed through the 3016 level and rotated several times before dropping back down, making 3013 intraday resistance. So right now, if price cannot get back above 3013 or start to see more acceptance back above the zone, we could be looking at a push back to 3002, and below 3000 starts to open up more weakness. So this is going to be a very, very important zone to watch here for the ES. So I wanted to spend a little bit of my extra time on that one. The NQ is going to be very similar. This one also range-bound market in August, a solid breakout here to begin September. The first pullback is defended inside the PIMA trigger zone for a new high. Price nearly reaching the August high and the FOMC key level. FOMC key level is 79.73.5. We still have a little bit more before that is reached. And then again, the previous high price is a little bit higher. So while the ES looks like it could, in theory, have completed its move back to those zones, this one still needs a little bit more to go. But the same rules apply here. 7,800 is very important. I would even go down into about 77 to 77.50. That we could drop into that zone and still bounce. But if we fail to hold it, we rotate back down to 7,400. So that's the zone, right? 78 to 7,700. Really, 7,700 is not kind of the major level that if it fails to hold that zone, this thing could sell off quite a bit back towards 7,400. All right, let's take a look now at crude oil. Now, crude oil having quite a bit of selling pressure here. CL going in one direction, gold going in the other. Right now, gold rallying to 1532. This was a rejection here at the FOMC key level from from July 31st, and here in September we have retested it and turned down quickly. So right now, if you kind of compare this chart to the ES had its July 31st sell-off away from the FOMC key level. It bounced. It eventually made that the low, and you saw support form, and then price rallied to it. So crude oil is about 2 days ahead of the ES right now. This price right here eventually rotated back off of it, closed back below the 200 and the previous month's close, and then 2 days later we're selling off back toward 53, and that's what we talked about before here. If we drop we could be looking at a move back toward 2820 and 7400 in the ES and the NQ respectively if the same type of reaction occurs. So right now, selling pressure in crude oil, 2 days running, and while we are kind of right in the middle of the zone here, this rotation suggests that we go at least a little bit lower into the recent lows here of 52.84, 53 even. So those lows look like we still have to be reached over the next day or two. But right now, clear selling pressure in crude oil. Lastly, taking a look at gold futures. Big day up right now. Big day up. It happened in after hours trading yesterday. It bottomed out and rallied, and it has continued to intensify in its strength of this move. Even recently, over the last 2 hours, the intraday trend has strengthened. So this is a big breakout. It was a inside day breakout. From the previous session, we had a very sharp 5-day pullback, one of the largest 5-day pullbacks that we've had in a while. And now you're seeing a pretty good bounce back up. This is all happening, again, right in the zone where it needed to happen, which is the pivot range and near the pivot range midpoint. So higher value relationship, this is the midpoint of the previous month's range. And pulling back to that zone needed to hold, because a failure to hold it only has one level left to test. So the bulls needed to keep that area bid, just like they did this last time, just like they did here. That could easily lead to a retest of 1566, as we mentioned earlier. So right now, very strong day here. We want to see price hold on to these gains. If it can hold the gains and close basically like it looks, any pullback the next morning could be a continuation play toward 1566. To close the day below today's midpoint would be significantly bearish, at least on a short-term basis. All right, that is it for now. We'll see how this develops the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.